And back home, South Africa relies heavily on corporate tax revenues like any developing country. However, the country has in recent years been experiencing a tax revenue collection shortfall due to tax evasion. This brings to question compliance and tax morality by big companies. A recent study published by SABC states that the largest 10% of multinationals are associated with an estimated 7 billion rand tax loss. SABC is Southern Africa Towards Inclusive Economic Development research program between the economic cluster in South Africa with local and international research institutes. It says most companies are involved in profit shifting and transfer mispricing in these monumental tax revenue losses. To help us understand this practice is Tim Mertens, who is the chairman of Sovereign Trust. Well, he joins us on the line from Cape Town. Good afternoon to you and welcome. How big is this kind of practice in the country, Tim?
Well, good afternoon to you and your listeners. It certainly is a fairly large concern that has been expressed by not only the South African tax authorities, but tax authorities around the world. And really what it's all about is that corporates make billions in some cases, but pay very low tax in the places where they either operate or they make those profits. So those profits and the tax on those profits then doesn't come back to the country where the corporate usually resides. And so, it's been a practice for some years now that jurisdictions like Ireland, Switzerland, Hong Kong, Luxembourg, Netherlands, and there are lots of others, will provide low taxes where big corporates can operate from, and the tax rates in those particular jurisdictions are much lower than here at home at 28%.
Well, firstly, let us explain what is profit shifting and transfer mispricing.
Yeah, I mean, basically what it's all about is that there are various methods in which, corporates, instead of paying tax and essentially getting their profits declared onshore here in South Africa, they really declare them offshore where there's a much lower rate of tax. So consequently, there is what we call a base erosion and a profit shift, and that base erosion refers to the erosion of the tax base here in South Africa, less and less tax which can be levied by South African revenue. And the profit shifting refers to the profits really being held and, maintained and kept in these various jurisdictions, as I say, like Switzerland, Hong Kong, Ireland, and others, which then don't obviously, it doesn't allow the tax authorities in this country to tax them. So it's called base erosion and profit shifting, and has been really very much the subject of a macro approach from lots of different countries, which we refer to as the OECD. And there are various reports that have been put out to try and curb or at least try and eliminate and retard this kind of practice. But I think it's very, very important just to let your listeners know that this is not illegal. It's very, very much, part of tax planning, but it's certainly something which tax authorities are trying to minimize through a multinational corporation.
So, Tim, how do they lead to these monumental tax revenue losses, especially when they are undetected when they happen, and they only get realized when damage has already been done?
Yeah, I mean, it's a good point. I mean, over recent years, some of the big household names that we're all used to hearing, Google, Facebook, Starbucks, and others, have been they've been operating in jurisdictions. Ireland is a jurisdiction which comes to mind, where, for example, I think it was either Microsoft or Apple, one of the two big computer giants, did a deal with Irish revenue to pay. It was just less than 1% tax. So, that was something that obviously wasn't in the public domain until it came out, and there was an investigation done by the House of Lords in the UK. But of course, those are the big corporates that we all know about. There are lots of other much smaller companies, but still sizable enough to obviously have the interest of revenue authorities around the world, where these profits are being shifted to other jurisdictions or being retained or made and accumulated in other jurisdictions other than a place like South Africa. So it is an issue which is being looked at on an ongoing basis, and I think you're going to see more and more interest and discussion about this in years to come.
You know, Tim, every time when we talk about corporate tax fraud and tax evasion, when one thinks of how money is siphoned from one country to the other, everybody would talk about Switzerland. Now, are you saying that in the world, there isn't even one single government that can say, we need to talk to the tax authorities or the Swiss banks about this siphoning of money throughout the world, and how should it be brought to a standstill?
Yeah, I mean, you've hit the nail on the head there, because really what it's all about is that obviously domestic tax legislation, like, for example, here in South Africa and in other countries of the world, it just doesn't have the reach or the scope to be able to deal with international taxation, which is really what this is all about. So it's critical then to have a multi-pronged approach, and this is why the Organization for Economic Development and Cooperation, the OECD, has got involved, and there is obviously task team and there are action plans on this very issue to essentially sign up all the countries and talk to many countries like Switzerland, Ireland, Hong Kong, and lots of others. I think that there are probably 116 or so that are now part of this task group, and really try and work together at a multinational level to try and what we call really level the playing field. In other words, make it fairer, because I think the general idea is that you and I are saying, well, hang on, these big corporates are just not paying their fair share of tax. But again, I reiterate, they're not doing anything wrong. It's just that I think, they're not paying their fair share on the basis of clever tax planning. And obviously this is what the OECD and other multinational bodies are trying to address.
All right. On the line from Cape Town, thank you very much to Tim Mertens, who is chairman of Sovereign Trust. And